How arbitrage mutual fund returns are taxed in India. That's our topic for discussion today in the Market Secrets investment series. Before we get into today's session, I'd like to mention that Market Secrets had recently launched Algo Traders Program ATP. If you are someone who is interested in learning end-to-end algo trading, then consider joining Algo Traders Program. I'll leave the link to it in the description section of this video. And with that link, let's jump into today's session on how arbitrage mutual fund returns are taxed. Before we get into the taxation part, let's understand the basics of arbitrage mutual fund. Okay, arbitrage is nothing but an opportunity. Okay, for example, right, if you're buying onion as 100 rupees in Chennai, and if you get an opportunity to sell the same onion at 200 rupees in Bangalore, you will generally buy in Chennai and sell it in Bangalore, right? I mean, even if the transportation cost is included, right, per kg it might come to 120 rupees. You can easily pocket the 80 rupees difference, right? This is a simple arbitrage opportunity. Likewise, right, arbitrage mutual funds will simultaneously be buying and selling the same underlying security or its derivatives in different markets to make risk-free profits. So if there is an unusual difference between the spot price and future price of any instrument, you can buy one and sell the other, and you can pocket this difference, this unusual difference. You can pocket it. That is what the arbitrage mutual fund does. So these opportunities generally manifest when there is a split, or when there is a bonus issue, or when there is a merge. So in such cases, right, these arbitrage opportunities occurs in the market, and it's usually short-lived. At least it will last till the expiry at most of the time. So when the contracts expire, these opportunities will disappear. So for this 20 or 30 days duration, right, you can make a good amount of money. So that is what the arbitrage funds usually do. So since you're buying and selling the stock at the same time, you're not holding any stock. Like you will buy a spot and you will sell futures. So you're not taking any equity risk here. So that is the beauty of arbitrage mutual funds. There is no risk. It's generally called as zero risk or risk-free investments. Okay, so that's a big advantage of the arbitrage mutual fund, because you don't have any risk associated with it. Okay, so with that basic understanding, let's jump into how the taxation works. So even though it's an arbitrage fund, it should have greater than 65% of its money invested in equities. So anyway, right, so arbitrage mutual funds will buy stocks and short the futures, right? So it obviously be working with the equities. So this criteria will be easily fulfilled by almost all the arbitrage funds. And the returns from this will be similar to debt fund. Okay, so you cannot expect huge returns when you compare the long time return from arbitrage mutual funds, right? It will look relatively similar to how much returns we'll get from the debt mutual fund. So if it is similar to debt mutual fund, you might ask why we need to use the arbitrage mutual fund. Because the taxation of arbitrage mutual funds is similar to equity mutual fund, because this is investing in equities. It's actually not investing, it's more like trading in equities. But anyway, right, since this is trading in equities, the taxation of arbitrage mutual funds is similar to equity mutual fund taxation. And equity mutual fund is the one that is taxed at the lowest range. Okay, it's 10% long-term capital gains tax, and it also has 1 lakh exemption. So that is where the arbitrage mutual fund takes a big leap forward. Okay, the post-tax returns from arbitrage mutual funds will be significantly higher than the debt mutual fund returns. Okay, so that's what you need to understand. So the returns from arbitrage mutual funds will be similar to debt mutual funds, but taxation is similar to equity mutual funds. So your post-tax returns will be much higher. Okay, now let's see in detail how the capital gains from arbitrage mutual funds will be taxed. So if your holding period is less than 1 year, then short-term capital gains at 15% is applicable. Again, this taxation is also much lesser than the debt fund taxation. Okay, because for debt fund, as per the new rules, you'll be taxed at the slab rate. This is if you're in 30% bracket rate, this arbitrage funds is taxed at 15% short-term capital gains tax. So you're actually paying only 50% of the taxes here. So that's a big tax advantage when you compare it with debt fund. And if your investment duration is greater than 1 year, then it's great because you will have the long-term capital gains at 10 percentage. And for that also, you have 1 lakh exemption per year. Okay, so first 1 lakh long-term capital gains is completely tax-free. You don't have to pay any taxes. Post 1 lakh, you'll have to pay 10 percentage tax. That's how the capital gains is taxed if your investment duration is greater than 1 year. So this is exactly same to equity mutual fund. So that is where the big advantages as well. And when it comes to dividends, it's taxed at the slab rate. So I generally don't recommend investing in dividend related funds. I have explained this in detail in the earlier episodes. So the beauty of arbitrage mutual fund is it provides a legal tax loophole or legal tax advantage. Okay, because you get return similar to mutual fund, but you'll be taxed like equity mutual fund. So your taxation is lower. So your post-tax returns will be much higher. So some people will use this for proper tax harvesting. So they'll do the harvesting in the arbitrage mutual funds generally, and they'll leave the equity mutual funds untouched. So if you have few lakhs invested in arbitrage mutual funds, right, returns till 1 lakh is completely tax free. So you can easily invest 10 to 12 lakhs into arbitrage mutual funds, and harvest tax every year and reinvest the same. So if you keep on doing it right, any returns from it will be completely tax free. So a lot of people use it instead of holding the money in FD savings account and debt mutual funds. But it's up to you, and even though it doesn't carry any risk, right, you should do your proper research before investing into the arbitrage mutual funds. So with that note, we are closing today's session. If you have any queries, comments, feedback about this episode, leave it down in the comment section. I'll be happy to address it. Also, hit the like button if you have liked this video and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.